If you can't seem to find a strategy that works and is simple, I got the strategy for you. This strategy helped me catch a trade that was 128 in the same day. Can't get any more simple than that. So let's get into it. So this strategy, I just call it the last strategy. It's so simple, broken off into three major points. 30% of it is psychology, 30% is risk management, and 40% is repetition. What do I mean by that? Psychology, you're going to grasp this strategy in such a way that at this point, you only need to look at it as a percentage, right? That's why having a target, you should be aiming for 8 to 10%. Don't look at the money. Look at the percentage. Risk management, you need to be so anal about it. You cannot, fall off the tracks. You can't change anything. You have to follow it. If it's a win or a losing streak, it does not matter. Repetition, that all comes down to journaling. What do I mean by that? When you do any trades, if you go to do it on TradingView, FX Replay, there's so many different, programs and tools out there. I would suggest also to write down, or if you have like an Excel sheet or a journal that we actually dropped in our recent boot camp, I would say document every single piece so that you know the ins and outs of your strategy and you get to a point where it becomes second nature. Now let's circle back on this. Psychology, you're looking at everything as percentage based. Don't look at the money. Why do I say that? Because money will come. Yes. But if you're just chasing that money, that dollar amount, that's going to affect your emotions to the point where you may exit a trade, too early, or exit a trade just because, oh man, I'm in this negative. You need to go in with the mindset of, if you follow the strategy to that degree, by the end of the month, you're going to end up on top, right? Risk management, like I said, that's where you have to follow the rules no matter what. If it's a winning week, losing week, does not matter. You have to follow them. Now, when it comes down to repetition, you just have to do the same thing over and over and over again, right? And now let's go ahead and break this strategy down into actual rules to follow. Now, in this breakdown, I'm paying attention to what exactly? The risk. What do you need to do with that risk? The risk, the only thing that you need to focus on, and this is why, like I said, this strategy is so simple, but you need to follow it to a T. I know a lot of people in here want to trade 2%, 3% per trade, trying to flip an account. Only a small percentage of traders can do that and actually be profitable. If you want to look at it from a long term where anybody coming into this can immediately, find something that works, this is how simple you got to make it. Risk only 0.5% or 1% per trade, right? That's all you got to do. And don't deter from that, right? Now, on the news side, I'm very anal about how I trade and when I trade. Why? I'm only trading when I go on Forex Factory and you look at the news and you look at the folders, what I trade NAS 100, I'm only paying attention to the US news, right? And I'm looking at how many folders there are, throughout the week. I always look at it on Sunday, review them. If I'm going to trade Tuesday or Wednesday or Thursday, whatever, the most of those red folders I want to see is one at most. If I see anything more than that, I won't trade, even if my setup is there. Now we're on to the target section. What is this exactly? A lot of people just think, it's just finding, your TPs and this and that, or trying to figure out the RR. Not exactly. You want to have a full rundown exit plan, meaning you may want to have a final TP or maybe have different points where you may take a partial out, right? And once doing that, you literally have a run by play on what you want to do in each case. Then you want to have strategic point of entry. Never follow anything that's outside of, your entry model. And that leads into compounding, right? Now with this, number one is never, ever marry a trade. Why do I say that? Because when you marry that trade, that will cause you, even if you had, let's say, I don't know, 2 losses already for in one day. You get stuck on, oh, it's going to go my way. It's going to go my way. Then you enter another one. That leads into revenge trading. And now all your progress, you just threw it out the window just because you emotionally became attached to that trade. And the second one is never look at, the money. Never look at that. Same thing with marrying a trade. That's what's going to happen. Let's say you're in a rangy market. It happens. Right? What happens if, let's say, you're doing really well, it's going in your favor, and then, oh shoot, now it's pulling back, and now you're back at where your entry is, you're like at break even, right? And now let's say you go a little bit into negative. That is where emotions start dictating your planning and how you want to go about it. Because now maybe you're going to get out early because you're a little worried. When you enter that trade, you should automatically have one thought in your mind. Whatever that stop loss was, whatever that equivalents to on your account, that's gone. Once you have that mindset, the rest is easy. Now, the very last one is only look at the percentage gain, right? Kind of like what I was just saying, right? You're trying to look at the percentage gain because that is the strategic skill that's going to take your trading to the next level. Now let's get down to the actual strategy. So what we're going to start with is we're going to be on the higher time frame. I only really need 3 time frames for this strategy: 4 hour, 5 minute, 1 minute. So right now we're in the 4 hour, right? I want to go ahead and determine, where's the next break of structure, right? And in this case, obviously it's pretty obvious. I mean, if you hold control, by the way, and you scroll on your mouse, that allows you to zoom, in and out. Just a little tip for you guys that are, still new to TradingView. Once we determined, once that break of structure has happened, right? This is beautiful. We had a big movement to the downside, but let's really break it down for a second. It's obviously going to the downside, right? Why? Because if you look at it, if you just let me finish real quick, it's constantly breaking structure to the upside and then it switches to the downside, and now it's breaking structure to the downside repeatedly. So naturally, after a break structure at one point, it should return, pull back, right? And continue on. So if you think about it from that aspect on the higher time frame, then when you go ahead and hop into the mid time frame, so in this case, it's the 5 minute, to look for, we're going to start looking for our entry model, right? And I'm just going to use, this tool real quick just to speed things up and whatnot. But ultimately, we're looking for the market to pull back into this point where, oh, look, there was some news right there. That explains it. So there's probably going to be that big hike. Yep. So once it hiked up into that zone right there, now we can start looking for our entry model. Entry model is so simple, right? All you're looking for is, transaction, fair value gap, order flow, retracement, entry. Simple. That's literally the strategy. So in this case, I have the fair value gap already marked out here. Just click it right there. And another thing that I see is we have a transaction right here, right? You're probably looking at it like, what is that? Well, that's basically when you have a supply and demand going back and forth. You have a reaction, and it's telling you basically which one is going to be in control. So in this case, we had a demand form. It reacted to it and it blew through it, caused that fair value gap. And ultimately now we're looking for liquidity to build up for that next entry model, right? So let's go ahead and hop into the lower time frame. And now let's just go ahead and highlight some things, which I noticed here. There's a 1 minute zone right here. So we can go ahead and just mark it out just because we're looking for ultimately order flow, right? Now that we have this zone marked out, let's just go ahead and change it to correct color. That's just how I keep myself organized, and drag it to the side there. Beautiful. So what did we just mark out? We have a big imbalance, or some people call it fair value gap. That's perfectly fine. Terminology does not matter. And it has a 1 minute zone inside of it. Now, it does tap into the fair value gap, but it doesn't convince me just because we have that zone resting. If we didn't find that zone, then I would have, started looking for the same entry model. So Now with this zone here, it taps right into it. Beautiful. Now from that point on, we can start looking for proof that order flow is, true. It's going to happen, right? So what I see right now is I see obviously a zone right here that can be used for that transaction, that demand. Beautiful. See an imbalance and a supply all in one zone. I just figured, let me just mark it out just to point both of them out, right? Fair value gap. We're drawing it. Beautiful, right? Oh, whoopsie, grabbed the wrong box there. But even though my entry is going to be around both of them, I still like to mark it out, right? And that's ideally the best setup you can probably find for my strategy, to be very honest with you, right? So I'm just going to, when I place the entry, cover both of them just to be on the safe side. Does not matter if the stop loss has little extra space. You want to be on the safe side with this, right? Now, in terms of where you want to, take your, your final TP, I like to already plan that. I mean, technically you can aim for that low because once it's supposed to break that low to continue on, that's what it's supposed to do, right? Naturally. Well, I have my fib. Technically, I would aim for one of these zones here, like the first one there is TP1, TP2, TP3, TP4, but just for the heck of it, I'm just going to mark zones right here just to, at least see how the market reacts to when it, gets to those zones. But ideally, I say aiming for that first TP, that low, is good enough. 9 times out of 10, that's going to give you at least a 1 to 5. And in my personal opinion, that's great. So I'm going to let it play through really quick. And let's not forget the liquidity that's creating while the market is slowly playing through. So it's generating this liquidity that we can ideally look at as kind of part of the reason why we're targeting that low as well. So that's what you ultimately want to do. You want to build a story and an actual reasoning on why the market should play out this way. So if you let it play out a little bit more, beautiful. So yeah, after it tapped into that, that's ideally what I'm looking for. I mean, it was a little bit more volatile than I would have personally liked, but still, this is the picture perfect idea of how my strategy is, what I'm looking for. And I mean, just halfway through that, I think it was like maybe an hour, 2 hours in, and you're already at 1 to 4. I'm going to speed this through just so you guys can kind of see it play through a little bit quicker. And yeah, so it takes like 4 or 5 hours, I think. Let me see. Yeah, so about 4 hours. So yeah, I'm just going to let this speed through just to see how, it plays out with all these different TP points that you could have also held through. And another key thing too is you honestly could have just taken, 80% out and just held the last 20% of your entry, right? Your lot size or whatever. If you're going into futures, then it's a little different. But I also want to point out that it's literally the same thing over and over and over again, another bit of order flow, perfect example. And yeah, guys, if you have any issues, questions, Discord is in my bio. It's free. Check out all the free tools, links in my bio. And as always, stay profitable.